As expected yesterday, both the euro and the British pound gained slightly, driven by data on US economic growth. The nation's gross domestic product rose at 1.1 annual rate in the first quarter of 2023, below market expectations. This indicates that the US economy may well slide into a recession by the start of 2024. Moreover, the ongoing banking crisis, slowing activity, as well as high interest rates are expected to have a more pronounced negative impact on the country's economy. Notably, the GDP price index, measuring the changes in prices of final goods and services, increased by 4% in the first quarter. This signals a more or less normal economic state, which allows the Fed to raise interest rates further. Today's macroeconomic calendar is full of important releases, including data on GDP in Germany and the euro area. According to estimates, Europe's biggest economy probably grew by 0.1% in the first quarter, after shrinking by 0.4% in the previous 3 months. Italian gross domestic product is forecast to have increased by 0.2%. Eurozone GDP is estimated to have picked up by 0.2% in the first quarter of 2023, after showing no growth in the final quarter of 2022. A better than expected indicator will support the European currency. In addition, traders may take notice of data on German inflation, which is anticipated to ease slightly. The focus of market participants will be on US personal consumption expenditures price index, the Federal Reserve's preferred GOG to measure inflation. Its continued decline will allow the Fed to move closer to a pause in its aggressive rate hiking campaign. In this case, the regulator will probably deliver a final interest rate increase at its upcoming May meeting. If the core PCE price index rises on a year-on-year basis, the Fed will most likely keep lifting rates. And now let's move on to technical analysis. According to the Euro-American dollar trading chart, the level of 1.0995 acts as support. A false breakout at this level amid upbeat data on economic growth rates in the euro area will create a buy signal, driving the euro up to 1.1031. If the price breaks through this level and consolidates above it, the volume of long positions will increase further. In this case, the single European currency will most likely rise above 1.1063, forming a triangle pattern. Its breakout will open the way to 1.1096 and 1.1129. At these levels, I recommend going short on a rebound, counting on an intraday correction of 25-30 pips. Short positions at 1.1063 and 1.1031 can be considered only amid a false breakout. Alternatively, bears may gain control of 1.0995 if the price breaks through this level and tests it from the bottom up. A sell signal will be generated. Thus, the euro will slide to 1.0966 and 1.0941. At the mark of 1.0941, it will be possible to go long on a rebound in the hope of an intraday correction of 25-30 pips. Long positions at 1.0966 and 1.0995 will be relevant only in the event of a false breakout. Speaking of the British pound, it is still drifting in the range limited by the level of 1.2500 and the area of 1.2437, 1.2413 from above and from below, respectively. A false breakout at 1.2461, the middle line of the trading range, will create a buy signal. Given that today's macroeconomic calendar is bereft of any crucial reports from the UK, the pound sterling has every chance of recovering to 1.2500. Its breakout will pave the way for further growth, namely up to 1.2521 and probably 1.2543. At the level of 1.2543, traders are recommended to go short on their bound to catch an intraday correction of 25-30 pips. Short positions at 1.2500 and 1.2521 will be relevant only in case of a false breakout. As an alternative, if the price fixes below 1.2461, short interest will rise. The British pound will come under pressure, falling to 1.2437 and 1.2413. At the mark of 1.2413, it would be a wise decision to go long on a rebound. Long positions at 1.2437 and 1.2461 can be considered only amid a false breakout. Good luck and have a nice weekend.